Hello traders everyone, welcome to our new webinar. It's Monday, May 27th, so hope you can hear me well. Hey Anas, how are you? Okay, so is everything fine? Hey, Tim is also with us. So we already have few people here. We are again streaming this to different platforms, but most of the time I'm keeping an eye on chat box here on YouTube. Last week was quite interesting, as you know. Firstly, there was nvidia that beat expectations, and we have seen stocks moving to the upside. But then at the end of the week, we got these strong USPMA figures, which caused some reversal. So now the question is if maybe Fed will stick with the rates higher for longer. But I think that this week's new inflation data. Hey, Hakan, Eric, welcome here. So I think that this week's inflation data again will be very important. USPC will be released later this week. Also, the most important probably from the Eurozone will be this harmonized index as well that will be released on Friday, because as you know, a lot of speculators think that ECB can actually be the next first bank that will cut rates. I think that they're pricing a 90% chance for this. So if there will be some kind of disappointment, if inflation will be hot, then of course these odds will significantly change, and this will be visible through our charts. Today also there are holidays in the US and UK, so that's why we could have a little bit of slow price action in till tomorrow actually, but that doesn't mean that market will not move. You never know what can happen in the markets. We know that this is a very sensitive field. So if we start with maybe the 10-year US yields, let me check. Okay, here is the daily chart. So just to give you the fresh update here, as we already discussed last week, we have these 5 waves down, and now we are tracking a counter trend movement. So everyone got so excited about this lower US yield when we got this US CPI data, but then market actually did not move straight to the downside. We are seeing a corrective rise, which is actually totally normal, right? Because after each 5 waves up, you will see a 3-wave retracement. But now again, after this US PMI data last week, there are new speculations that Fed will not cut anytime soon, and of course this is driving the US yields higher. So of course this maybe can be the case, maybe really they will not cut rates anytime soon, but from an Elliott Wave perspective, I definitely should not ignore the potential bearish pattern here. So we have 5 waves down and a 3-wave rise. I'm not sure what can cause this sharp new leg to the downside, but certainly we are approaching some very interesting, important technical levels. You have former wave 4 here, right? So wave C comes pretty close. Of course, you should watch this market through the week. Okay, we'll see how this will unfold. Today there are holidays in the US, okay, but still the pattern is there. So if this ABC rise really unfold as I expect, and we will see our reversal down from a resistance, then we know what this will mean for the other markets. US dollar will most likely decline further, and at the same time there can be new opportunities on other markets. So even if we have seen some setback on US stocks, well, I still think that there are pretty interesting levels that we will also discuss a bit later. So these US yields will probably define what will happen on other markets. But if I respect the Elliott Wave principle and the clarity of the price action that we are seeing here going back from start of May then we can clearly say that that's a bearish pattern, because we have 5 waves down and a 3-wave rise. So maybe now, if you're not familiar with the Elliott waves, if maybe someone is watching here who don't know the rules, well, if we are now in a 3-wave rally, then 3-wave rally should not retrace more than 100%. So there is plenty of room for this correction to unfold, okay? But that's definitely the first resistance. But I will, of course, admit that I'm wrong, and I will change my bias if I see prices start acting impulsively to the upside and even breaking these invalidation levels at some point. But for now, at this stage, at these levels, I just think that we have to be aware of potential new reversal to the downside, because if US yields will come down, then dollar itself will also come down. Now, some will trade treasuries, bonds for the different assets. Here we have this TLT. I'm not sure if I showed this one last week, but clearly, I mean, that's a bullish pattern. You have very strong rise here away from end of 2023, okay, because there was a speculation that Fed is on the right path, bringing down the inflation. Then this sentiment has changed through the course of the start of this year, and we have seen this 3-wave retracement. And notice where market has stabilized down here. So I think that we have a very beautiful bullish reversal playing out right now. You can actually count also 5 waves up here in a smaller time frame. So it looks like that even this market is showing us that potentially we will see a drop of the US yields, okay? So definitely we'll try to look in this direction, because clearly the wave patterns shows me very clear picture at the moment. So regarding dollar, if US yields will come down, we know what this can mean for the dollar. But as I said so many times, just be aware the dollar index may not be the best example for overall dollar look, because you have because it's not equally weighted. You have ECB could potentially cut the rates, and this will impact the dollar index as a whole, okay, but not necessarily dollar in general versus other currencies. Now here, still my primary wave count suggests that we are here in a triangle, potentially in a wave D. So it's a very tricky here situation, because you are actually at some kind of a pivot level from the last from the last 12 months or so. So it's very hard to find any good interesting setup looking at this price itself, but definitely we have some idea where the market could go in the next few months. So I still think that by the end of the year we will potentially see dollar coming to the downside. But for now, because this drop here is also somehow slow, because I realize that ECB could really be the next bank that will cut rates, we can immediately see a very strong bounce here on dollar index. So it's very important for me not to that I do not push the direction which I think that market will go. I just think that some of the patterns out there are still valid. And one of it is potential ending diagonal in wave C. So this one shows me that there can be a room for even 108 if the current levels around 104 support will hold, okay? But based on some intraday price action that we're tracking with members, it looks like that we have this corrective rise on the intraday basis. So possibly we will see either more sideways or even drop in the near term on of the US dollar. Also, if you look here on the euro, we have some very nice broken trend lines. Firstly, the blue one that goes back to start of the year, and then you have this red one which goes back from March of this year, and first blue line has already been retested last week. And more importantly, this drop from the highs is somehow overlapping. So I think that that's a correction, and I think that more upside could be seen. Also, we got a very nice bounce as well on Friday. And normally when you see this kind of type of reaction on Friday, you can expect that maybe this trend will resume at the start of the week. But this time is different, because you have holidays in the US. So a lot of interesting unexpected reversals or sharp moves that will occur on on Friday can be due to holiday reversals, because there are new flows. Some traders will be out for extended weekend, and of course this can impact the price. So it's not the perfect ideal scenario to say that we are going higher early this week, because as I said, there are holiday in the US and the UK. But still, looking at the price action, I think that we can be in a corrective movement for wave 2 or wave B. Now the first support has been retested at 108.10. Deeper one could be at 107.60. I think that this one can be even more interesting and attractive. Also notice that here's the 38.2%. So usually when I'm looking at a potential higher degree pullback against the previous 5-wave movement, I want to see the retracement for the 38.2%. I know that that's not always the case, but I will try to look towards these levels and wait on price to come a little bit down before I may issue potential new trading idea on the long side. Okay, so definitely think that much lower supports can be much better, but it really depends how you approach the potential trade. You can scale in, or maybe you just wait on this wave 2B to come lower and then wait on a new impulse, and then just look for potential entries with closer stops. But overall, I think that euro is quite in a very good position to see more upside as long as we are trading above 106. Now, cable last week, as you know, has been doing quite well. We got UK CPI data came down to 2.3%. It's actually quite a lot down from 3.2 in the previous reading, but it was less than forecast. I think that forecast was 2.1% or so. So it was just a temporary reaction here. Firstly, we got this spike to the upside because the expectations were missed. Then we have seen moved lower, but market very quickly stabilized. So I still think that we are in a very good, nice, healthy uptrend here, but even this one will not just continue with the same sharp directions. I think that maybe you should keep an eye on this trend line that goes back to this July. I think it's July highs. Okay, so this one comes in here around 128. It's also very nice psychological figure. I can see that we also have some interesting swing resistance here in this, and I'm not really sure what happened on back then here, March 21st, but definitely it looks like a very important level. So maybe that's the potential resistance, and you could see some retracement, but overall I just think that pound is doing quite well, and then the next pullback could be very interesting for more upside. We also covered euro pound last week, which by the way we don't do very often, and I highlighted the potential reversal or break to the downside because we got these UK CPI figures, and we said that because it was a very expectations were quite big, and on the other hand, which means that there can be easily missed, and on the other hand you have these speculations that Europe ECB will actually cut rates, and this one then caused these relationships between both policies, of course, are making some very nice reversal to the downside, and we are seeing this broken trend line support, and I think that can be even more weakness coming because clearly we have this completed ABCDE triangle that we've been tracking for a while. Okay, we even shared some of the free analysis for this one as well on our Twitter channel. So by the way, make sure to visit our Twitter channels as well, because we share a lot of different stuff there. Okay, and by the way, if you're a first-time visitor, make sure to subscribe to our channel. Please press a like or leave us a comment below this video if you're watching this recording later and not live here. So euro pound, I think more weakness could be seen, but just keep in mind that very big ranges for this cross are always very important and very significant. Here I have this monthly chart which shows very big range going back from 2016 actually, and you can see that now we are slowly maybe this year can come to the lower side of this range, and then let's see what happens down there. But definitely would be looking for limited weakness whenever we see a little bit of more extensions towards maybe 84 could be the first area of potential support. So I still think that you should not just blindly expect that bears will continue, as they at some point will reverse. Now let's take a look also, let me check my notes here, on dollar yen. So dollar yen is now, after this intervention, what that was a month back or so, we are now seeing a recovery. And this recovery, if we will zoom this in a little bit, it's so far in 3 waves. So I think that we are coming into some very interesting area. I think that 158 was the zone when Bank of Japan intervened. So this one, if the market will erase all of those losses and will regain back towards these prices, I think that this can be again very interesting resistance, because we know that there must be a lot of stops just above that level. So I think that 158 can be very interesting resistance. Potentially you have even ABC here in the making. Okay, but I realize that maybe Bank of Japan will now make a step back. Maybe they will not be that aggressive anymore, not even with hikes. So they will probably be very cautious. They actually express this as well. So maybe this pair will stay sideways here, but overall technical levels here are very interesting for some maybe intraday trades around 158. If we break, let's say, back towards 159 or even higher, then I would be looking for the final push to the upside to extend towards 163, 162 as part of potential wedge formation here. So even under that scenario, I would be expecting a reversal, or I should say limited upside for dollar yen this year. But with only 3-wave rise now away from these May lows to current 157, 158 resistance, I think that it's worth to keep an eye on this price action here. If suddenly we start breaking 155, then I think that even more immediate downside levels can show up here. Guys, let me know, please. Can you hear me well? Because I know that last time I got a lot of comments below the video that they cannot hear me well, that volume is very, very low. So please just let me know if something isn't right, please. Okay, thanks Wonka, thanks for being here. Okay, what we have left Kiwi for FX. Kiwi. Okay, so I think we covered this one last time as well. We talked about potential bullish developments here. Let me just check. Yep, I have this one here. I also shared this one in our Twitter channels. So what we've been discussing last time, as you know, there are not much of expectations for potential cuts from Bank of New Zealand. In fact, they are sticking to current views. So I think that as long as that's the case, Kiwi could be doing quite well. And in fact, 2 weeks back, we got this very nice and strong breakout that I called it as a continuation candle. And then we got a very nice pullback to this swing support. And now it looks like that we are headed even higher. So I think that we could see maybe even 6,200 for this week. And in Elliott Waves terms, even if we think that that's wave C, okay, with an extended structure rather than wave 3 of an ongoing impulse, still you have to see a bit more upside here. Okay, so I think that that's a pretty nice, interesting pattern, and I think that Kiwi could do quite well. In fact, if you are watching maybe even Aussie and looking for some trades on Aussie, by the way, we are covering Aussie almost in each webinar. Just take a look at Aussie versus Kiwi, you will see that we are in a very strong bearish reversal there, very strong pattern, which maybe could give you an idea which currencies you should trade versus US dollar. It really depends if you're long or short, of course, but this can be very helpful and can tell you that Kiwi is showing some momentum. Now let's take a look also on crude oil. So crude oil has been doing, has not been very maybe did not show very clear patterns, okay, because you have some potential prices trading in a big range here between these two contracting trend lines, but still we were able to, if we take a look here, we were able to forecast these potential reversals quite nicely. So by the way, if I'm showing this because if someone wants to join our premium services, of course we are covering our markets on a daily basis here, also with intraday updates. And last week we actually saw this $80 as a very $80 per barrel as a very important resistance area. And also I've been highlighting this and put some charts on Twitter as well. And so far we have seen a very nice break to a new low before market stabilized. But now here comes the tricky part, okay? I still think that the drop from this high is corrective. So if we think that we are in a triangle here, it means that this sideways price action will resume even further. So it can be very tricky once we start approaching the lower side of the range. Maybe that's still going to be the case around $73–74 per barrel. But overall, maybe these lower crude oil prices that we are seeing for the last almost 6–7 weeks or so could tell us in which direction maybe inflation will move in with the next releases. But of course, not all energy markets are showing the same situation, not all commodities are showing the same direction, but crude oil has been one of the most important for inflation, obviously. So crude oil for the rest of, for the, let's say after summer, I would start looking for potential break to the downside, especially if till then market will just stay sideways and trapped in this ABCDE range, okay, because pattern obviously still incomplete. Now let's take a look also here on gold. So 2 weeks back, maybe 10 days back or so, you know, there were a lot of FOMO. There was a lot of bullish calls for gold and silver. It was, I think, at the end of the week. It was on Friday when silver, specifically silver, broke to new highs. And what happens a week later? Well, you're seeing a very deep, unexpected pullback. So a lot of crowd, a lot of investors looks like that they are on the wrong side, because everyone tries to play the breakout. So it's not always just easy game to catch the breakouts here. So actually I'm not surprised, because market will always try to do the opposite of expectations. So if everyone just expected and suddenly start looking for gold towards 2600 or so, well, you will get a pullback, and that's exactly what is happening here. But now this pullback, of course, they will always show up, and they are very healthy for the markets, because you will see a lot of position adjustments in this period. So now what we are seeing is still a very nice incomplete, meaning ongoing bullish pattern. Okay, it's a 5-wave movement. So you have firstly this 5-wave movement within this extended wave 3. Normally when that's the case, that this type of a price action really tells you that momentum is there, that you are in a strong bull run. And whenever you are waiting for potential entries, you should wait on the next higher degree pullback, which could then find a support at the previous fourth wave of one lesser degree. So this goes here at 2280 or so. Here you have also the 38.2% of this extended wave 3. And by the way, if that's maybe wave 4 that will be made by 3 waves, then still you can expect a bit of more weakness. Maybe some will say that what if this is a flat formation? It's definitely also flat formation is also very possible, but still you will probably look for same or similar price levels. Okay, but we are trading prices, not always just structure, because you're buying assets at price. So I think that we are here just making a very nice healthy pullback, still within higher degree uptrend, and as long as we are holding prices above this wave 1, obviously I will be looking for more upside. Only an overlap with 2130 will invalidate this bullish interpretation, and then I'm afraid that we have a very big correction coming on. So and not only gold, which is still in uptrend. By the way, just don't get me wrong, I still think that gold will fly even higher, but after 3 waves are shown. Here we also have palladium and platinum. You can see here we have a very nice break out of this potential triangle. So after pullback, I think that there can be more upside. And on this one as well, even if, by the way, that's weekly chart, we have a very strong downtrend here. But if we are in a wave 4, well, even this wave 4, I think could see a bit of more upside, because I just doubt that that's a 3-wave movement. But from a trading perspective, I mean, it's not really clear. You can easily see wave 4 unfold as a potential triangle here. So it's a bit tricky. I think that if we're looking for some kind of a potential opportunities on metals, gold can still be very interesting, and silver obviously as well after the next 3-wave drop. Now let's take a look on the S&P 500. So last week, as you know, nvidia beats earnings. Here it was on Wednesday, market immediately moved to new highs. It was quite an easy trade through Asia, but then the next day we got the US PMI figures, very strong economic data, and this caused then a sell-off that also occurred on Thursday and Friday ahead of this extended weekend. So what we are seeing right now, I think that we are in a corrective phase. It's pretty nice wave count here. If you look at the whole price action, actually if you look back from end of April, that was clearly a corrective decline, because drop was not in 5 waves. Then when we got this this overlap with this 5,200, that's when we got even more confident that market is back in a bull run. And now you see prices within that in wave 3 were much more extended, okay, compared to the first leg. So obviously in such occasions you should expect and wait for even more upside after pullbacks. And now when you have your wave 4, maybe this week could bring prices a little bit lower. I still think that this will be then corrective rise, corrective drop, but I realize that even this interpretation is valid. However, I try to not only to look at futures, maybe if you look at cash here, that was an interesting development. So here we have this US CPI release, and I think that I also talked about this in the past. So here we got this latest US CPI release. It was a gap higher, and then prices came perfectly back into this gap area. And now you have also another gap here from last week. Okay, so I think that if we see another movement here into that area in the next few days, I just think that there will be a very interesting and strong support down there at 5,240. So I still think that if we get these levels, could be a way forward that will belong to this incomplete uptrend. But after that, you will get the wave 5, and then things will again become a little bit interesting. Now, since I mentioned nvidia, if we take a look on it, so nvidia gapped higher. You're in a wave 5. This thing can always extend much higher, but I would pay attention maybe on a 161.8% of this wave 4, and especially once we will have potentially 5 waves up here within wave 5. That's when you should be aware that at some point even these gaps since earnings were released, will be filled. It's been very similar price action here, going back to February when we got strong earnings. Market stayed in uptrend for a while and then made a pullback. So maybe this pullback will show up when we see US indexes also making another final leg higher here on these intraday charts, and then all of the markets could potentially see some retracements. But Nvidia overall is good for cryptocurrencies. I will cover them in a second. As you know, also Ethereum spot ETF looks like they're on the right path to launch it, but not sure when trading will begin. It can still last month still trading will start with this spot ETF. But overall, I think that higher Nvidia and this positive sentiment from last week, positive news for cryptocurrencies, can be very, very interesting for even higher prices. So if we take a look maybe here on total cap, you can actually see that the most important is that a drop here from May highs has unfolded in 3 waves. So even if we stay sideways here, it can still be a correction within uptrend, or maybe this already is a completed wave 4. But in either case, I think that there is room for further strength. And after this Ethereum news, as you know, Ethereum is now outperforming Bitcoin. We have been also sharing a lot of charts, ratio charts as well, and looks like that Ethereum is on the right path here. So looking at the Ethereum, we had a very nice and strong move to the upside. I think that we can break maybe in the next week or so, or who knows, maybe already in the next 24 hours, we can break these highs from March. But what's important is that you have potentially wave 3 here. Okay, so that was wave 1, wave 2 pullback. Now we are making wave 3. So I think that the next pullbacks still can be very interesting to join this trend. Supports, of course, would be at this minor wave 4 here. Okay, but I think that more upside will be seen here. This trend will stay up, should stay up until you see 5 waves up. Whenever these 5 waves up will show up, that's when you should be aware of potential new slowdown. Looking at Bitcoin, we have here possibly also price action, just slowdown in a wave 4. It's good to see Bitcoin still trading above 65,500 because that's the area of a wave 1, okay, end of a wave 1. So if wave 4 will overlap it, then we will know that that's not an impulse anymore. In such case, the higher degree wave 4, okay, with the pullback from March highs will just become a little bit more complex and longer in time, but still it should be part of an uptrend. So here, then maybe if we get an overlap, as I said, with 65,500, then price will either stay very sideways choppy, maybe even unfold as a triangle, maybe even as a flat. Okay, but definitely that will be the price to maybe make a step back. If you see this overlap, to make a step back and adjust your potential trades if you're looking for Bitcoin. Regarding liquidations, I've been watching this one. We have some big numbers above 72,000, nothing below it. So maybe these levels on the upside are much more attractive to rather than one on the downside. Okay, traders, I hope that you enjoyed this video, this presentation. Please make sure to leave us a comment, press a like, ask me if you have any kind of questions. Also follow us on Twitter. So visit wavetraders.com if you want to get full access to our premium services. Okay, and you can also apply for a trial there. Traders, trade well. Talk to you soon. Bye.